welcome to Euromoney live stream and to our REDF Saudi Housing Finance digital series. My name is Victoria Ben and I am Commercial Director for Euromoney and Global Capital Conferences. Before we get started, I need to read you a short disclaimer. This live stream is for information purposes only. We are not providing investment or transaction advice. All opinions are those of the presenter, guests and audience, not of Euromoney Institutional Investor PLC, and all content is copyright Euromoney 2020. As is standard practice, we'll be taking your questions throughout the session in the Q&A function, so please do get ready with some interesting questions. And if we have any tech issues, we have our invisible producer, Isabel, who is helping in the background. So let me now start and introduce our show and our guest speaker. This is our penultimate session in our REDF Saudi Housing Finance digital series. Throughout the series, we've been hearing about the incredible growth in Saudi Arabia's home ownership and huge increase in demands for mortgages there. Today, we're bringing an international perspective and we'll be talking all things covered bonds. And how this financial instrument might help Saudi Arabia in the development of its housing market and more. To do this, I'm delighted to be joined by a very good friend of Euromoney's, Luca Bertalot. Luca is Secretary General of the European Mortgage Federation and the European Covered Bond Council. Luca, welcome and thank you for joining us. It's great to have you on the Euromoney live stream platform. Can you start by telling us a bit about yourself and your organization?
Thank you, Victoria. It's a great honor for us to be with you. Well, we are supporting the development of covered bonds and capital markets around the globe. We think that we have an incredible story to be spread around the globe, which is the performance of the covered bond markets during the crisis. I would say the financial crisis of 2008 and also this crisis with the COVID crisis. So we are very delighted to have the opportunity to speak to a global audience and to highlight the key points and the strength of this market over those months.
And Luca, you're based in Brussels, is that right? How has 2020 been for you in Belgium, in Brussels?
Well, 2020 is a year full of fun. I mean, we are here in Brussels, the funniest capital of Europe. I mean, and we are delighted. I mean, I think it's, the situation is really intense and tough in every single capitals of Europe. Even here in Belgium, the situation is very serious. We are ready for an unprecedented Christmas, but I think that we have all a strong commitment to turn difficulties in opportunities. And I think this is part of the leitmotif for today. We are in front of a new age, I would say, of our history, and we have all to develop new solutions, new ideas that can bring the humankind to a better future for the coming months.
I like it. I like the positive feel to the discussion already. Let's start, Luca. Can you tell us, just, let's start at the beginning. What are covered bonds? Maybe give us a bit of history. I've been at Euromoney for 17 years, and one of the first conferences I was involved in was with the VDP, and we did a fan brief event. So perhaps you can tell us just a very quick overview history of the product and what they are.
Well, the covered bonds is what I will define the core characteristic of the covered bonds is being a crisis management tool. Whenever Europe was in crisis, they use a financial instrument to bring the capital markets and the economy out of this crisis. This is the story of covered bonds. The first name of covered bonds, of course, is in German because it was introduced by the Germans, but has already, from the very beginning, the capacity to mix together different kind of opportunities and bring, for example, Dutch investors to Germany to re-establish the economy and allow long-term investment in the economy. So the mechanism is coming from the Middle Age, and the mechanism of the mortgage, which is coming from a French word, la mort du gage. So when you, it's a way to secure long-term investors and give cash flow to the real economy to be able to reactivate the entire economical cycle. How does it work? It's a legal infrastructure around a pool of assets which are the real guarantee, the real security to protect investors in case of default of the issuers. So it's an instrument providing a double level of security to investors and allowing the lender to lend money to a cheaper and longer maturity at the same time. So this combination, it's a driver for supporting the real economy, and is the linking element between the financial markets and the real economy. And that's, I think, what is a very rough definition of what is in covered bonds in less than 30 seconds.
And can you give us some, what types of, the size of money? So how much issuance of covered bonds is there a year, and how much is outstanding currently?
Well, if we consider the global picture of covered bonds is 2.5 trillion of euros, which is one of the largest private assets currently outstanding in the world. It's a major, the major countries issuing covered bonds are, of course, Denmark, Germany, Spain. UK is a very important market, but every single country in Europe after the crisis of 2008 is using covered bonds for tapping the markets and for financing the mortgage market. I would say roughly 1/3 of the mortgage market in Europe is financed via covered bonds, because it's very cheap for lenders, it's very secure, and the European regulators are very comfortable with this asset class because it's very much financial stability oriented and is bringing solidity to the system and allowing transaction to be much more secure in the system, and is also a very good mechanism of transmissions of monetary policy input to the real economy. So for all these good reasons, the market is taking shape. Now we have issuance of covered bonds in Australia, in Singapore, in Japan, in Brazil, in Canada. So it's very much a global story, and is getting more and more also interesting for emerging markets. For example, Turkey is issuing covered bonds not only with mortgages, but also with SME. Some other countries are issuing also covered bonds by using public assets, so infrastructure loans. I would like to highlight a few things happening now while we are speaking in France. A major lenders is using covered bonds to finance hospitals, health material. So really, covered bonds are part of the recovery, part of the solution. Once again, are providing an exit strategy to capital markets in front of a major crisis.
Yeah, it's interesting. So can we come back slightly to the structure? Because obviously in America, in Europe and globally, there are covered bonds. In America, they use ABS, MBS. What's the difference between the structures?
Well, the structure is that you have a dynamic covered pool guaranteeing the asset for an investor, which is one of the major difference between securitization and covered bonds. The covered bonds are economically and legally on balance sheet, so they remain on the belly of the lender. Sorry to be very simple in my language. And the lender has the responsibility of keeping the quality of the asset over time for the investors. Normally, this is regulated with very strict guidelines, legislative guidelines, which oblige the lenders to keep certain level of quality in the covered pool, which remains on the balance sheet of the consolidated group. This is one of the major difference. Then the dynamic covered pool is different from the static covered pool of the securitization. So if there is a non-performing loans, the lenders has the obligation to replace these non-performing loans. And it's not the single loans guaranteeing the investors, but is the total amount, the pool, protecting the investors. So all in all, we can say that with covered bonds, the investors has 3 levels of security. Of course, the lenders is able to pay back in case of default. If this is not the case, the investors will have a complete pool of assets dedicated only for him. But normally cover bonds are so strategically important for a country. In some countries we can speak that there is a third level of security, which is the systemic importance of the cover bonds, that the entire system is designed to protect that system because it's a fundamental pillar of the financial stability of that market. So I don't know if I was able to give you a bit more sense of.
Yeah, and I mean, presumably that's why they're so popular with investors, is this element of security.
Yes, for long-term investors especially, if something is boring and is very solid, it is actually quite an interesting component for them. And I have the major investors are, of course, central banks, but also asset manager, insurance. Long-term investors are really the most important component of our investor basis. Interesting enough, now there is a new trend, which is, of course, the green trend. But ESG cover bonds are representing a very important level of issuance, which is not only green, but also social housing or social solutions like the one that I was describing in hospital can be considered quite an important element of news of the last year, but in the last 2 years was one of the major trends for this market.
I wanted to just touch upon what the latest developments have been in the legislative, market space. Is it the ESG? Has that come to the fore of late? Or there are other market developments? Presumably, these markets have to evolve, constantly. So, if you can talk a bit to how that's changed recently.
Yeah, you're very right, Victoria. The cover bonds, they adapt always to the market situation. So we are in a completely different situation of what was in 2008. Well, the really big news is that since the European Commission has published a directive on cover bonds, there is a full recognition of the European authorities of this thing, cover bond. And what is happening is that now every single national law should be adapted to do this new European directive, which is an opportunity for countries in Europe because they have a new recognized asset class that has to be implemented all over Europe, not only in Germany, but also in Latvia, in Estonia, in Lithuania, in Bulgaria. But it's also a fantastic opportunity at global level because we are more or less all in the same boat and we have to redesign a cover bonds, which is a set of market best practices. So by 2024, the European Commission will issue a third-party equivalence. So they will officially recognize cover bonds outside of the European Union with the cover bonds in the European Union. So this is really a Basel Committee story, because for the first time, we have the chance to build a global asset class, which will give to countries, not only in Europe, but also outside Europe, a new investor base, a new capacity to access capital markets. And I think this can be really a nice opportunity for the Saudi. They have a booming market in the last 2-3 years. And this is really a fantastic opportunity to arrive to the deadline of 2024, ready to be fully recognized by the investor community. I think that's a clear deadline that should be clear to every country who decide to enter in the cover bond space.
And talking, so we've got an audience of our Saudi colleagues and friends. So why use cover bonds? So SRC is the Saudi refinance company, and they are apparently planning to issue next year internationally, so $500 US. Now, if they're doing an MBS, ABS, why should they do cover bond?
Well, cover bonds is a sign of maturity of the market. It's not only the instrument, the bond, but it's also the significance of the housing market in the economy. It's also meaning that the legal infrastructure is ready to compete at the international level. So when you arrive to the point of producing a cover bonds, it means that the entire system is ready for making a jump at the international level. But I mean, the cover bonds, this is if we want to speak strictly legally. I mean, it's a sign of maturity of the legal system. And I think that the Saudi landscape is very close to this kind of level. Yeah. But it's also a story of the middle class. Why you need cover bonds? Because the cover bonds is a fantastic opportunity for the middle class to grow, to build business, and to provide services to this middle class. For me, it's very much aligned with the Saudi strategy vision 2030.
Yeah.
I mean, it's a booming middle class arriving, asking for new things, new houses, modern houses. And this is a combination of three things. It's housing, it's digitalization, and it's sustainability. Because, I mean, all these three things are going together. I mean, blockchain solution for housing, and this is an opportunity. And with the growing middle class arriving and knocking at the door, asking for hospitals, schools, new housing. Also, I think what is amazing in the Saudi is that the consumer appetite is changing. The average size of the house in the Saudi middle class is changing. In the first years, when they were producing mortgages, was very much the mortgage market was only for the functionary, and now the booming housing market is for also the private sector. So it's a growing private sector asking for a new kind of services from financial markets. So covered bonds can be the cherry on the cake in the sense that can really be the instrument that can help the development of capital markets.
Yeah.
We should not see covered bonds against MBS. Sorry to say, they are complementary. I mean, for me, the two things, they can go hands in hands. They serve different kind of investors. Sorry, I interrupt you, Victoria.
No, I was interested because you mentioned digitalization, and are there examples of countries that have gone above and beyond in terms of digitalization and in the housing market? Because consumers now want to get things immediately, and is getting a mortgage immediately possible in some places? Is a digitization now so good in some places that Saudi could look at that as a kind of somebody to replicate?
Yeah. I think digitalization is the future of the housing market. If you consider now during the lockdown, we were not entitled to do any property valuation or any visits. I mean, you have done everything online.
Yeah.
So I think that we have done in few months a cultural jump towards technological solutions that it will be difficult to go back to normality. I think we are all asking ourselves what will be our life tomorrow. So I think starting from scratch in this is a nice opportunity because you can set best practices from the very beginning. We see blockchain solutions in Sweden, in Russia, in most of the European countries. But I mean, we have to cope with very old systems that have to be replaced. For maybe having a fresh new system can be a nice opportunity because I mean you don't have to change, you start to use this. But I mean, going back to your initial question, why covered bonds? I see three reasons for having covered bonds implemented in a country like Saudi. I mean, the first one is let's call domestic reason. I mean, covered bonds can improve the diversification of the investor base. Can allow lenders to lend money longer than before. Normally, this is a sign of maturity, but if you want to reach and to make a loan, a mortgage for 20, 25, 30 years, you should not have only the asset, but you should have the liabilities to allow banks to move forward. My understanding is that also the merging process, we are in transition all over the world, but also in Saudi, and the transition of the banking sector can also allow to have bigger banks from a consolidated group and able to tackle the covered bond challenge or opportunity, as you prefer, in a different way. It's so a diversification of the investor base, but it's also a diversification of the funding needs for a lender. It's a capital access. Now we move to the, I would say the second reason why is an access to capital markets, giving a clear benchmark, not only for the country, but I think that Saudi can be a benchmark for an entire regions, which goes from Morocco to Indonesia. So can really be an element of novelty, allow me to use this strange word, and bring also the Islamic finance in a completely new dimension. Because covered bonds now are issued normally in euros because I don't know, Singaporean lenders, they want to sell papers to the European investors.
Investors, yeah.
But I mean, maybe we should think about a sukuk approach if we want to sell to local investors. I think we have seen this reflection in Morocco, we have seen this reflection in Malaysia and in Indonesia. So Saudi has the opportunity to be leading in this kind of debate, which is a philosophical debate, which is how to approach to this. And then there is a quality of the asset. The third reason is normally with covered bonds, you really work on the quality of your housing market, and you give a financial stability story to your national authority, SAMA in this case. And you give a special instrument with a privileged treatment from a capital charge point of view, from a repo transaction, from different kind of aspect that can really help the system to be ready to be fully Basel compliant, which is, I think, the target of every single system.
Yeah, you mentioned Morocco. I mean, so far, the Middle East, we haven't seen cover bonds, but I think you've been working with the Moroccans. Can you tell us a bit about what's happened there? Maybe some of the challenges you've had, and what kind of what's next?
Well, I think it was personally a pleasure to work in this Moroccan experience, because they have done an excellent work. I think the legislative framework design in Morocco is very solid. It's up to international standards. Unfortunately, the last years, I mean, they were supposed to actually publish the legislation after the approval of the parliament, January, February last year. Unfortunately, the priority list is very much different now, and cover bonds are not on top of the priority list of the parliament. I mean, situation is very serious for what we understand, like all over the world, and they are very careful on a more, I would say, immediate economical support to the real economy. But I mean, I think they are in the pipeline, and I would expect Morocco to be very successful in their implementation of, we were even thinking of bringing the ECBC plenary meeting to Marrakesh. That was our idea. That was our secret, but then...
That sounds like a fantastic plan.
Yeah, but I mean, then unfortunately, the situation is what it is.
No, fantastic. And obviously, other examples of Islamic countries developing the possibility of cover. So you mentioned Malaysia, Indonesia. So
I mean, Malaysia is very much looking at what was the experience of Singapore. And I think that every single country implementing cover bonds has a dilemma. Should I wait and build a legislative framework for cover bonds, or should I go to the structural solution?
Right.
That's, I think, a dilemma. It's, I think there is no good or bad, but of course, having a legislative framework, you give much more comfort to investors to be fully aligned with the international standards. It takes normally a couple of years. If you, I mean, in Singapore, in other countries can be a bit longer. But I think that is worthwhile to try. Another very excellent example was Brazil, an emerging market, and they were able to design a cover bond framework in a few years. And I think now the Brazilian legislation is very solid and ready to support the country in the recovery package. So I think that in most of the cases, it's really worthwhile to consider a legislative framework, because can protect investors, can protect depositors, can protect the authorities from any kind of crisis, and solve some problems like asset encumbrance, some problems that, I mean, they are there, of course, but they can be mitigated or solved by having a strong legislative framework. So we are discussing with Malaysia, we are discussing with Indonesia as well. And sometimes cover bonds, they go together with the sustainability and green bonds. The two discussions are very close, I would say.
Hand in hand. A lot of countries have set up government-sponsored mortgage finance agencies. I think Malaysia is an example of that, to refinance bank housing lending. They're often very good instruments of government housing policy. How would you compare the covered bond and the mortgage finance agency models?
again, I don't see a competition between the two
No.
models. I see that the two things, they can live together and they can represent a market solution for two different moments of the history of the country, or maybe for two different purposes. I think that this debate is a bit confused by the American situation, where Fannie Mae and Freddie Mac is so present, it has, I would say, killed any potential cover bonds in the US.
Yeah.
But I mean, I don't see that the two things, they should go one against the other. I think that we are in Malaysia exactly discussing with Chagamas on the option of building a cover bond framework. Also, if you think that in South Korea or in Japan, those agencies have been very close to the cover bond reflection. And I think that it's possible to have both, or maybe one and supporting the other one. I mean, so I think it's just a question of time.
They're not mutually exclusive, so they can.
No, not at all.
And I mean, does, you know, with all the new countries that are considering the product, you know, I mean, do you wish that the market had grown more in recent years?
Well, I think that the market is moving ahead in the most possible way. Allow me to say this, in the sense that, I mean, as I said, it's a long way before reaching a cover bond. So you have to review your fiscal framework, you have to review the insolvency law, you have to discuss with the Minister of Finance, but quite often with the Minister of Justice. So it's not something that you can fix overnight. Also, it's very important to discuss with the market players in a way where the cover bond framework will be useful for the lenders in the country. I mean, the biggest mistake that you can do is take, for example, the German or the French legislation and copy and paste in another country. Doesn't work, doesn't fly. You have to understand the needs of a country, speak to them, speak to the investors, international investors and local investors, national authorities, find a community. And also because this community then is supposed to be ready to change the legislation in case of need. So having a community is sometimes more important than having a good legislative text. Allow me to say and to provoke the audience with this statement.
Well, I mean, you know, we've been lucky that we've been part of the community as it's grown over the few years in Saudi Arabia, and we have these discussions. So, you know, you're kind of talking to some of the community now. What does Saudi Arabia? What is the next step? You know, you know, what does Saudi need to do? What's the step one in developing their market?
I think it's simply a round table. I think to put all the actors around the same table. I think that a national authority should be around this, should be moderating this. Sama, I think, is in a perfect place.
Okay.
We have a very important issuers. SRC, I think, can be one of the leading market player in this discussion. And then I think that we should be opening a debate, very honest, what is feasible, what has to be changed, how much this community wants to be aligned with international standards, and then having an open debate. Do we need it? Because maybe you don't need it. After this reflection, you say, you know what, I prefer to use an MBS. It's cheaper and it's responding better. But I mean, the first thing is having a technical roundtable analyzing the potential of this market. And then I think after that, you know what you want. That's the first question. You have to compare what you want with what is available at global level. And then I think you can start to draft a potential framework with the cooperation of the financial, the Ministry of Finance. I think the central bank has a key role to be played. Also the Ministry of Justice and all the other Ministry of Growth normally should be involved around this table.
We've discussed quite a lot on these live streams just how impressive the Saudi government and stakeholders are at working together, and this is all part of Vision 2030. So, you know, I think, you know, they would be you know, if they wanted to do it, they would certainly be quick, and they would work together. And you know, it's they are, given the amount of changes that have happened in the kingdom, you know, the speed at which it's happening, you know, it's just incredibly impressive. So I know that there would be you know, if they decide that's the route that they want to take, it would probably happen quicker than you would expect. So yes, I'm going to turn to some questions from our audience. So I'm going to have a look at our questions. So please, if you have questions for Luca, do send them in. I've got one here that's asking, do covered bonds have to have the same interest rate, fixed or floating, as the underlying mortgages?
Oh, that's it's opening a very good question. I mean, what is the swap market available in a country? I mean, of course, I mean, I think this is a question of structuring, how you want to structure your covered bond in function. It doesn't have to be, they have the same kind of coupon, but I mean, normally it depends from the swap market that you have available in the country where you are based.
Okay, and another question, do covered bonds sold outside a country tend to crowd out government bonds from that country in the portfolios of investors?
Well, that's the typical fear that you have. I mean, I think also several European countries, they were a bit reluctant to implement covered bonds for years because of this. And then the crisis arrived, and they discovered that they needed covered bonds together with the, I mean, they needed capital markets next to the govies. Just to take an example of the country where I come from, for Italy, which is, I think, one of the largest govies market around. They were very skeptical on covered bonds, and then they were hit by the crisis in 2011. And fortunately enough, they had the covered bond market ready to go, and the covered bond market was an extraordinary way to actually tap capital markets below the govies spreads and being cheaper for banks. And I have to say that for banks was a safe line to be able to go to trade inside the govies line.
I've got a question here from Sid Kasuma. It says, when a secondary mortgage corp issues a bond with collateral of a corporate loan where the loan has recourse on a pool of mortgages, would that be considered as a covered bond?
Well, I mean, I think the covered bonds is not only the mechanism, but it's also the legal framework that is around this. So, I mean, I think that, I mean, the idea is not simply having a collateral thing, but it's also, I've seen also there was another question, I think, which was quite important, that we should protect all creditors of the bank. And in case of insolvency, it's a zero-sum game. I think that's very important. That's why you need a legislation, because it should be very clear what is the level of asset encumbrance that should be allowed in the system, and how to protect both the covered bond investors, but also the depositors and the other creditors of the banks. So that's why I think it's very important that the central bank and the Minister of Finance are very clear on how they want to protect exactly, and how they want to rank the different actors in case of insolvency. So that's why I have a certain sympathy for legislation with covered bonds. I mean,
yeah, I mean, there's a comment, there's a question, I think this might be the one you're referring to. It sounds like covered bonds just take the best collateral and give it to one class of creditors at the expense of others. Isn't bank insolvency a zero-sum game?
Yeah, there are mechanisms to protect the system, which is over-collateralization, and also you have eligibility criteria for asset that, I mean, can limit, you cannot put all your best asset only for covered bonds, but normally you should have a filter which will limit this risk and mitigate these risks as much as possible. I think this is the case in most of the countries with a successful covered bond framework.
So I've got I've got a statement and a question from Tariq Al-Jurayan, who's at the Real Estate Development Fund. So they are our co-hosts for this series. So he's saying thank you very much to the Minister and the Chairman of the Board of the REDF and so on, the Minister Al-Hagail, for hosting us. But he's basically putting his Saudi bonds, and I presume he means Saudi cover bonds. When does Saudi Arabia resort to issuing cover bonds? I guess when they're ready, you know.
Yeah, I mean,
and reasons to pay attention, to their, I think it's, I think that these are questions I think probably need to be asked, not to Luca, but probably to the Saudi stakeholders, to SRC and to SAMA and so on. So, but I think it's, it's interesting and good that we have REDF, listening to this session, and hopefully, we can connect you to them, and I hope we can do this round table at some point as well. I've got some more questions here.
Just to make one comment on this question, I had the pleasure to work with the Saudi G20 presidency last, and I think that the Saudi strategy 2030 is very much aligned what we have seen also in Europe for the Green Deal, EU Next Generation. I mean, the basics are all there. So, I mean, we are very much on the same page. And I think the discussions and rebuilding now after the COVID, the economy, I think there is a full alignment of the agenda of the Saudi government to other countries that are doing exactly the same thing. EU Next Generation, it's exactly going towards the same direction.
So I've got a question here. I don't think I've asked it of you. How do cover bonds deal with the risk of early repayments of mortgages?
Well, I mean, the swap market is, of course, but in Germany, for example, it's not possible to have early repayment. The Heimat or the fatherland of the cover bond. Normally, otherwise, I mean, you have to have a very solid swap market to be able to manage this. But working as a cover pool, I mean, you can actually manage this and differentiate the risk quite properly. Of course, asset liability management is a crucial item that has to be very well clarified also in legislation. But I mean, this is a key question exactly on what will happen in case of early repayment.
We've touched on it a bit. Saudi has just hosted the G20. They were the G20 presidency, and obviously at this time, climate change, sustainability, they're massively high on everyone's agenda. Can you tell us just a bit more? I mean, you've spoken about it, but can you tell us a bit more about the ECBC's green agenda? And I know there's a sustainable mortgage initiative, and I think the green cover bond label. So if you could talk a bit to sustainability, that would be great.
Yes, we feel the responsibility, Victoria, to build a banking instrument to support what we call renovation wave. We have a different problem from us, Saudi Arabia, is that we have to actually renovate the houses. I mean, most of the building stocks in Europe is completely outdated. I mean, it's been built, I think 90% of our building stock has been built before 2001. So we have to convince every single owner of the house to renovate their house, which is a challenge from a financial perspective, from a decisional point of view. So we have to create a special green package in every single mortgage to convince the owners of the house that making the renovation is interesting from an economical point of view, from a beauty point of view. The house is better, and we are all living in our houses and working in our house now. So what we wanted to do is to build a new green label for mortgages, where every single bank giving this green package with a special condition to people to renovate their house can actually tag this green label and be aligned with the green regulatory framework in Europe. We are doing this for the asset side with the mortgage label, and we are doing this for the liability side with the cover bond label, which is already available. So both instruments can really help most of the European banks to get a greener portfolio. Also, we have produced an IT protocol to allow banks to tag the green in their balance sheet. And we have to help Europe to retrofit more than 200 million of dwellings, which is a huge amount of effort. and fight at home, because when you have to renovate your house, you have to discuss with your partner, and that's the critical decisional point in every single house. So I mean,
yeah, it's fascinating. I mean, I think one thing that the pandemic has taught us, and everyone is talking about how we build back better and so on, and I do hope that it does change how we operate going forward, and in the future. And it sounds like these initiatives are you're already there and starting them. What would be on your agenda, Luca, for next year? If COVID, the vaccine, what's your kind of number one thing that you want to do to help move the market forward, the cover bond market?
Well, I think that we should mix the cover bond agenda with the green agenda. And what we would like to develop is a global network of market hubs where every single country can make green mortgages and green cover bonds together. So that's our plan. We are already working, for example, with the Australians, the Brazilians to make this happen together. And why not? We can be ready to support also the Saudi vision and to try to create a benchmark for the entire region that can really mix these two elements, which are actually three: is digitalization, sustainability,
well,
and capital markets.
Yeah.
So I think this is the priority for next year. We have several projects going on with sponsored by the European Union, but we are working also at global level with the World Bank, IFC, to support as much as we can a global debate around this. And that's, I think, the priority for next year.
Yeah,
building the recovery.
Yeah. Fantastic. Well, Luca, I think our time is nearly come to an end. So I'd like to say thank you very much for giving us your time today and sharing, some cover bonds A to Z for our Saudi audience. I hope you'll also join us in the Kingdom when we're able to travel there. We'll be going as soon as we can, and I know that our Saudi friends would like to see you. So I hope you'll be joining us. If there's anyone on this call that wants to talk to you or get hold of you, Luca, what's the best way of finding out more information on you and the cover bond world?
For sure, our website, where they can find the fact book, which is a fantastic publication with a clear list of countries that have already implemented the cover bond. So our website is the first place to go. It's on the contact details, you find all my contact details, so you can easily contact us. I think that's the best place to get.
And what is your website? Is it www?
It's www.hypo.org. Hypo. YPO.org. Or Google EMF ECBC cover bonds, you will see our name popping up.
Yeah, or you can email Euromoney and we'll put you in the right direction. So my thanks to Luca, my thanks to the Real Estate Development Fund, to the Ministry of Housing, to our sponsor Samba, to the Euromoney team who are still doing this amazing job from their kitchens and living rooms still. This Thursday will be our final session in the series. So please join us on Thursday. It's going to be Richard Banks who will be presenting the Euromoney REDF 2020 report. The report will explain the development of the Saudi housing market and how it provides current and future international investment opportunities. It's a really, really good piece of work, and we'll be sharing it with you all. But please do join us this Thursday. So that's the 17th of December at 9 o'clock GMT, which is 12 midday KSA time. And in the meantime, stay safe, stay well, and thank you very much. Thank you, Luca. Bye.
Thank you.